Good afternoon. This is Chris Brecher with the Simpler Stocks free video for February 5th, 2016. So you can see right here, it's about 1 minute after the bell. Basically, today was about the big rotation. We were talking about there are different ways to interpret trend lines, different ways to interpret head and shoulders, either bottoms or tops. And then you had a big rotation today. So let's go right to the charts and show you what I mean about where we settled out. Right now we have the futures up all of 50 cents. At one time they were up 11. One time they were down 14. With the NASDAQ, which at one time was down 41, only down 10. With the Russell up 3, we have the futures up 75. This is actually the Dow futures. You have bonds up. You have the transports up. And basically the transport with a massive rally up 216, while the Nike's down 215. So as you see, there are a lot of conflicting forces in here. What I had mentioned, that I mentioned a long time ago, was about the Dow Jones Transports here. And let me unlink it so you know what I'm talking about. Is that basically when they got down to support in the October 2013 area, that what we were probably going to get was the SPX on the right sort of doing its own thing for a while, deciding whether it's made a bottom or whether this is a trend line and it's going to sort of meander down while the transports slowly start reclaiming this 200 simple moving average. That's exactly what we're starting to see. Look at the SPX and put it on a weekly. And I told you that this line in the sand for me is this 200 exponential simple moving average. As you see, the transports are trying to reclaim it. And what did we say were the two weakest indexes? Were the NDX and the SPX were the strongest indexes that needed to still hadn't fallen. What has acted the worst the last 2 days? The NDX. Now, somebody rightly on the chat mentioned that the reason the NDX is underperforming the SPX is because of oil. And that person was dead correct. And why is that true? Because when crude oil seems to start reversing, and I'm not saying today it was down 48 cents, but that it's showing signs of stabilization, you start to get a spillover effect. First, you start to get some of the banks start to come back. And now, Goldman Sachs, I wouldn't say it's really coming back, but it's coming back somewhat. As you see on here, at least it bounced from 147. It's bounced about 8 points, believe it or not, from its low. But what you get is you get crude oil going up. You get the Goldman Sachs to start to go up because people breathe a sigh of relief thinking that all the high-yield bonds they have in inventory, that a lot of them are oil company bonds, that maybe they have a chance. Then when the banks go up, then the oil stocks go up because of crude oil also. So now you have crude oil stocks, bank stocks, and a lot of them are in the SPX, and then you get the SPX to go up. That's why the SPX has outperformed the NDX. Now, the NDX is more the high techs like the Googles of the world, which has acted obviously horrible the last couple of days. Now, if you put the NDX and the SPX up here, let's put it on a daily chart so you get an idea of what I've been posting when we do the forum in the Simpler Stocks Premium side. We've been watching this like a hawk. There are a lot of ways to draw this trend line. Do you connect that aberration? It's right at it right here on both sides. Now, you see those on dailies. Now drill down to a 78-minute chart on both. On Thinkorswim, you can't just put in one interval and it pops in, so I have to manually put them in. And this is the big thing that everybody's watching. Right here. Is this going to be some kind of inverse head and shoulders, like a Stewie pattern in here? And we've been talking about that for weeks, and then it doesn't work. So it gets above it, then it sells off, then it gets below it, then it rallies. So do you draw this line? And on the over here, obviously on the left, you see the NASDAQ isn't even close to being an inverse head and shoulders anymore. Or do you draw these lines like this? This is just another alternative. Draw them right here. And if this is true, all we're doing the last couple of days is testing it from underneath. That's what we're trying to figure out in this area. And that's why you don't have to jump and trade every second until you figure it out. Usually when I get that on a 78, I'll go to like a 39. Like I said, I messed up my intervals here, so 40 is good enough. Is there something in here that's showing me anything? All I know is you could say this a little bull flag, but in an overall poor market environment, and when you're under the 49 on the left, you can't trust it. On the other hand, you're over the 49 on the right. You can't tell. So both of these, everybody is watching these levels. 1885 on the SPX, about 41.25 on the NDX to see if they can hold. So those are the things I'm going to be watching as well tomorrow. One thing I'm also going to be watching, we talk about this on simpler stock, on the premium side all this time, is I know we have the unemployment report tomorrow, but you definitely have to keep in mind right here the open interest of 12,000 and the open interest in 19,000 of the SPX options that expire tomorrow afternoon. A lot of times that's something that could pull down the market and keep the market from kicking in as the transports are. So I hope this helps everybody. Like you know, we have a $7 30-day trial. Sorry if that's a broken record, but there's always new people to the free site. I think I should pass that along. The forum, we've been posting things right and left that have been working great on the premium side. And like you know, we have an hour before the opening where I'm live. We have a live chat where I discuss strategies, and we try to have it before the opening, an hour, so you have, and me being on an hour, so you have more than enough time to be ready for the trading day. So I hope this helps everybody. I will talk to you later. Thank you.